Welcome to Explain the Charts. Today we're looking at the Google stock, and as always, we'll be diving into both current events and the chart data to give you the full picture. Firstly, Google stock has been on the radar due to some significant antitrust news. A federal judge ruled that Google violated antitrust laws by dominating internet search advertising. The trial will now move to a second phase to determine remedies, which could impose major changes on Google's business model. Another antitrust lawsuit, focusing on Google's digital ad market dominance, is set to begin on September 9th. These lawsuits have the potential to create headline risk for Google stock, leading to short-term price fluctuations. However, it's important to note that Google's cloud computing and internet search advertising businesses continue to show strong performance. Google's cloud computing unit, the third largest behind Amazon.com and Microsoft, is increasing capital spending in response to the generative AI opportunity. This highlights Google's commitment to innovation and growth, which could bolster the stock in the long term. Now, let's take a look at the charts to see what they tell us. Let's start with the daily chart. Here, we can see a clear uptrend over the past year, with the stock consistently breaking above previous resistance levels. This suggests strong underlying bullish sentiment. However, the recent price action has been a bit choppy, with the stock experiencing a pullback after hitting a new all-time high of 191.75 on July 10th. This could be attributed to the growing antitrust concerns and market volatility. The 52-week range shows that the stock is currently trading within the higher end of its range, which could indicate potential for further upside, but also makes it vulnerable to pullbacks. Looking at the recent candles, we see a short-term trend of lower highs and lower lows, which could signal a potential reversal to the downside. However, the volume has remained relatively high, which could indicate strong underlying support. Let's switch to the 1-hour chart to get a more granular view of the price action. On the 1-hour chart, we can see a more volatile price action, with the stock fluctuating between support and resistance levels. Over the past week, the stock has been consolidating, forming a tight range between 160 and 170. This consolidation period can be seen as a period of indecision, with buyers and sellers battling for control. The consolidation pattern could lead to a breakout, either to the upside or the downside. If the stock breaks above the resistance level of 170, it could signal a continuation of the uptrend. However, if the stock breaks below the support level of 160, it could signal a bearish reversal. We need to keep an eye on the volume during this consolidation period to get a better understanding of the market sentiment. A surge in volume could indicate strong buying pressure, increasing the likelihood of a breakout to the upside. On the other hand, a drop in volume could suggest waning interest, increasing the likelihood of a breakdown. Let's zoom in on a specific time range on the 1-hour chart to highlight some key events. Looking at the 1-hour chart from August 13th to August 16th, we can see a significant drop in price followed by a strong bounce back. This coincides with the release of the antitrust ruling, showing the immediate impact of the news on the stock price. The stock dropped from around 165 to 160, but then bounced back up to 165, demonstrating strong support at that level. This bounce back could be seen as a sign of confidence in the underlying business, despite the antitrust concerns. However, the stock has since pulled back again, suggesting that the market is still cautious. This range of candles also highlights the importance of watching the volume, as a decrease in volume during the drop and an increase in volume during the bounce back supports the idea of a short-term correction followed by a potential rebound. Now, let's switch back to the daily chart and see if there are any long-term price levels to watch. On the daily chart, there are a few key price levels to watch for long-term trades. The 160 level appears to be a strong support level, as it has held up well during recent pullbacks. If the stock falls below this level, it could signal a breakdown and further decline in price. The 170 level seems to be a significant resistance level. If the stock breaks above this level, it could signal a strong continuation of the uptrend. The 190 level could be seen as a possible target for the next move higher, as it represents a previous resistance level that was successfully overcome. However, it's important to remember that these levels are not guaranteed. The stock could break above or below these levels, depending on the market conditions and the impact of the antitrust trials. We need to consider all factors, including news, volume, and price action, to make informed trading decisions. Overall, Google's stock appears to be in a period of consolidation, with the outcome of the antitrust trials being a key driver of future price movements. We can expect some volatility in the short term, but the long-term prospects for the stock remain bullish, given the company's strong core business and commitment to innovation. Keep an eye on the 160 and 170 levels, as a break above or below these levels could signal a major shift in the trend. Also, watch for any changes in volume, as a surge in volume could indicate strong buying pressure, while a decrease in volume could suggest waning interest. Remember, this analysis is for informational purposes only, and it's crucial to do your own research and consult with a financial advisor before making any investment decisions.